Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about key levels on spiders, how to rebalance your portfolio. We're going into the second half of the year. We had a record rally, historical rally in the first half of the year in technology. What's next, right? As we approach in the second half of the year. For those of you who are new, welcome. This is my brief bio. I was Executive Vice President, Head of Technology at Options Express from its inception to 2007. Options Express was an online broker-dealer acquired by Charles Schwab. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing it for over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. If you're new to trading stock and options, I encourage you to visit optionstrading.com to understand the risk associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance. Right, before we get into a trading plan, let's talk about second half of the year. Right? That's important. Let me just remove some of these pages. Okay. Sorry about that. All right, so let's talk about second half of the year. So again, inflation data come in a little bit better than expected, right? PCE data better than expected, and market is retesting 52-week high. We broke decisively above August high. We're retesting 52-week highs, and the next level is around somewhere between 452, 460, right? That would be April high. So there are two scenarios, right? The market has been extremely resilient, right? A lot of people, I think they were saying that average estimate for S&P 500 for this year was around 400 level, right? To kind of finish as a flat year. And we are already 10% above that level. So now we're going, so the idea is that a lot of people miscalculated how strong, resilient the economy is, including myself. I'm in that camp too. But nonetheless, there's no signs of recession right now yet, right? Unemployment is still low. Consumer is strong, still spending, stronger balance sheet, and earnings continue to surprise to the upside. So one move from here, assuming we're going to break this level, is to retest April high from last year, right? So plus 20 points. Right? And the next catalyst is obviously earnings season, right? We have rebalancing first half. The quarter end, the first half of the end. So now everybody's looking into the end of the year, what's going to happen in the next 6 months. After everyone is done, then the focus is going to be shifted over the earnings season, second quarter earnings season that will start in 2 weeks. And the JP Morgan, Delta Airline, Taiwan Semiconductors will announce earnings for the second quarter. So one is we're continuing to grind higher, 460, maybe, this earnings season is strong, maybe 480, plus 20 or even plus 40 points, right? I mean, another 5 to 10% rally from these levels. The second one is, we're going lower, right? If the earnings season is, if the Q2 is worse than Q1, And right now, when we announced the first, Q1 in April, we were at 380, right? When earnings started, or 400, we're 10% above that. So multiples are a lot higher, and you have to have a justification, right? So if the earnings are justified the multiple expansion, then we'll continue going higher, 5 to 10%. If the earnings do not justify, then we're going lower, 5 to 10%, right? So it'd be 420 minus 20 points, and 400 would be minus 40 points, right? As this earnings season unfolds, right? You probably need the earnings season. People are going to wait for Apple, Microsoft, Google earnings to unfold, Amazon. So probably we're talking about, end of July, end of August. So scenario number 1, we're going up 5 to 10%. Scenario number 2, we're going down 5 to 10%. Right? Scenario 3 would just trade sideways, right? Somewhere between 450 and 430, kind of a narrow range. So those are the 2 scenarios. Let's see what the choices are, opinion are. All right, so type in 1 if you think we have more room to the upside, and we're gonna still have a strong second half of the year because we can avoid the recession, and even though unemployment is gonna stay low, and earnings gonna continue to have a positive surprise. Martin 1, all right. Anyone 2? We have a lot more participation today. 3 sideways, 2, anyone else? Brian, Bijou, Andre, Don, John, Martin, Patrick, Peter, Randall, Richard, TTC, Tim, Timothy, Mark, Martin, Wayne, SRI 36. Some of you just have email, sorry. MATSFAN. Tom, welcome back, Tom. Virus. 2. Okay, so we're divided. Half of the people said 1, half of the people said 2. I think we have 2 people said 1. Oh, 3 that were trading sideways. I mean, if you follow my, presentations, I've been pretty bearish on the market, right? Especially, towards the end of April, end of May, right? So obviously, because of the starting with this breakout, starting end of April, and ChatGPT, generative AI, that gave significant boost to the technology sector, right? This is the best first half of the year on record in technology, and that was the biggest surprise. Despite yield inversion, despite higher yields, and despite the deceleration in the revenue, the idea that we are in a new era of innovation, right? We had, cable TV, we had air conditioning, we had cars, airplanes. So in the past 100 years, every so often, every, I don't know, 20, 30 years, there is this new invention that's going to create millions of jobs and make our life, a lot better. And that's AI, right? And based on that, you obviously have a very strong rally in the market, plus fear of missing out, right? AI is here, train is leaving, and I'm here not participating, right? So fear of missing out is definitely, and squeezing the shorts, right? A lot of people were shorting this market, especially the technology. And obviously shorts get squeezed, and you do have that significant rally. So I'm going to go with 2, right? For the same reason, nothing really has changed. The reason most people are wrong, again, because of the AI that was, otherwise I think we would be significantly lower. But, the idea that AI is great, but does it translate into revenue, right? and how much does it translate to revenue. And we've seen some of the stocks recently, like what was that? Micron, right? Micron, had a strong rally, right? The idea that we have a strong upward momentum based on the AI, right? You have elevator up and now elevator down, sitting in the key support. I mean, every stock has a unique angle, right? Micron is in cross current of China-US relationships, right? With the sanctions. So, stocks like AMD, right? Very similar, right? You have this elevator up and now significant pullback in AMD. What else? Google, right? Sorry, not Google. Right, Google, significant pullback and start decelerating. Pelletier, these are kind of at the forefront of the AI. So you can see elevator up, elevator down, maybe double tap, maybe lower high, but probably the best of this technology rally is behind us, right? And you can already see that some of these stocks are actually underperforming spiders, right? Spiders is at 52-week, trying to break through the new highs, but technologies, Teslas of the world, they are, they're still underperforming, they're not close. So the one question could be, well, the dollar is selling off, right? The dollar is pulling back significantly even today, and maybe we can rotate into the value stocks, right? So people second half gonna say, okay, fine, great, fair enough. We had the worst December on record, and now we have the best second half of the year. We have maybe technology is overbought and people gonna sell technology, but value is still oversold, and people gonna rotate into cyclical names, right? Because if we can avoid the recession, then cyclicals should also lead the market, or at least do a catch-up with the technology, right? Because there is a big divergence. At some point, these asset classes have to converge. So again, you have a pretty sharp pullback in value stocks, right? You had a pretty sharp pullback. It almost got to 52-week high, almost got to year-to-date high, and you have a pretty sharp pullback back to 200-day moving average. We are having a reasonable rebound, but still underperforming, right? Value is only up 0.5%, where technology is up almost 2%. So the value is underperforming, and I think value stocks, small cap stocks, they do not behave as a regular bull market, right? Small caps, you do have a pretty strong rally, right? Elevator up, but you have elevator down, right? Back to 200-day moving average. So that means that the best part of this rally is behind in the value stocks, right? And technology is overbought. So that's the reason I'm still bearish on the market and kind of haven't changed my mind, right? There are two camps. There are bears that have switched to bulls, and there are bears that are still think that their thesis is intact. So I'm in that camp. We'll see how it's going to play out. A lot of it is going to depend on this earnings, right? If this earnings is strong and market is at all-time high and breaking all-time highs, well, obviously there's no recession, and then the bull market. We are in the bull market. We continue to be in the bull market. Unemployment is not ticking up. Inflation continues to drop, and no lending, right? No lending. So that's my opinion on the market. Meanwhile, you have to have an opinion on the market. I do have a top to bottom approach. There are people that bottom up approach, value investor, Warren Buffett. I'm more of a top to bottom, more technical trader, top to bottom, but I do pay attention to individual stocks as well. So how do what are some of the trades? So let's go over trades from today. You can go to Elite Trading Circle, right? You can go to Elite Trading Circle, and in part of the subscription, you can participate in live trading room, morning bell, closing bell. You can also see individual trades. Actually, I've been also pretty active because it's the end of the quarter. I want to rebalance. There's some position I held for a while, so I want to start closing them. So one example is Nike, right? one of the most popular strategies, half of the volume on exchanges right now, on options exchanges, are these short-dated options, whether it's 0 days till expiration on some of the indexes or it's weekly options, but that's half of the volume, especially now with option volume on record. So a lot of people, most retail investors do the opposite of what I'm doing, or professional traders, they are buying. They're buying out of the money calls on Apple, right? Because the idea is that, you know, the train is leaving and train is continue to go higher, like Apple continues to make all-time highs. So people are buying out of the money calls with the idea that, you know, you spend 10 cents and 25 cents, but you can double, triple, quadruple your money, right? If Apple continues to move vertically up. My strategy is a little bit different. I take the opposite side of that argument. I sell out of the money premium. So I don't do it on Apple, but on Nike, I did it because you have extra volatility and extra premium in the options. So you look at the historical volatility, you look at the implied volatility, and you look at the risk profile of the trade. And if it makes sense, then, you know, I get into the trade. So this is an example of iron condor, right? I sold put spread, I sold call spread. It's 40 cents on the call side, 25 cents on the put side, so that's 65 cents on the $100 stock. So I'm collecting about 0.5%, right? And this idea of compounding investment, right? You can buy out of the money calls on Apple. That's what a lot of people do. And you can double, triple your money, but you have to time the market perfectly, and you have to time the magnitude of the move and direction of the move. Very hard, very difficult task to time the magnitude, right? The idea of options trading, you have to be correct on the magnitude of the move. You have to be correct on the, you know, timing of the move. Well, obviously, you know, you have to be correct in direction, right? Which is difficult, right? Very often I'm right on the magnitude and the direction, but not on time, right? Sometimes I'm, you know, wrong on time and magnitude, but, you know, that happens rarely. Usually it's time, right? Time, and especially with buying out of the money calls, weekly calls or short-dated options, you know, the clock is ticking, and you know, 9 out of 10 trades actually you're losing money. This is the opposite. When you sell premium, it's the opposite. You know, 8, 9 out of 10 times you're making money. And the idea of compounding investment, right? The goal is to have a trading plan, right? To have a trading plan, have specific rules that you document and you don't break, and then you execute this rule, right? You want to be a mechanical trader. You always want to size it correct, the same way, right? My trade is some of the rules for these trades. On the $10,000 account, I probably don't want to trade stocks that are over $100, $150, right? That's rule number one. I want to trade something that's very liquid, you know, trade in pennies. I want it to be a well-known stock, well-covered stock that makes sense. And, you know, on a $100 stock, you know, I always risk I always try to look for 0.5% gain, you know, and the risk is somewhere between 0.5%, could be as high as 2%, right? Just depends how much, you know, move you can do. So most of the time it's with, you know, the move is within 0.5 to 2% outside of that range. So, and the idea of compounding investment is that if you can make 0.5%, right, in the, you know, if you hold a position overnight in this case, or even if you make, you know, 0.5% a week, not even in one day, but in a week, right? 0.5% in a week, you multiply it by 52 weeks, that's 24% plus compounding investment. Well, that's your 30%, and that's, you know, record, you know, move in QQQ, right? So by having these reasonable goals, whether it's a 0.5%, 1% a week, you know, 2% a week, the more you're looking for, the more risk you have to take. But, you know, and you stay the course and you become kind of more mechanical trade. So position size, number of positions, and always in terms of risk profile, you always risk the same amount, right? I'm looking to make 0.5%, and my goal never to lose, you know, 2.5% of the portfolio, right? Some of the trades I make 0.5%, some 2, some 1. But the idea that, you know, the aggregate of all the winning trades is more than aggregate of all the losing trades. So that's example of Nike, right? I don't trade only options. A lot of people say, Vlad, you only trade options. No, I also trade Costco, right? I trim my Costco position because it's, again, I think market is overbought and probably going into the earnings. In the next couple of weeks, we're probably going to have a pullback. So I want to start reducing some of the positions or close them outright, or like Transocean, right? It's trading at 685. I've been trading around this position. I want to be out today. All right, so this is an example of a cover call where I had a stock and the option that I traded around this position, and now I'm out of this trade. And then another position, this is more of a longer dated stock, NOC, right? I held this for a long time, so I'm out of this stock position. So it's a combination of stock and option trades. Some of them are cover call, some of them are simple, just single option, right? We do have a live trading room, right? You can enter a SMS message, a phone, and you will get an SMS message every time I trade. So we do give you kind of this transparency in all of the trades. I encourage you to participate live, right? Because I can't tell you the size, right? I'm basically showing you what I'm doing, and I'm telling you what I'm doing, but I cannot tell you how much to invest and what to invest into, right? That's a financial advice, and I'm not an advisor. So the skill, the most important challenge, especially if you're new to trading, is to determine this position size, right? If you buy Nike, what is the position size? Do you buy one contract, or do you buy 2 contracts, or do you buy 10 contracts, right? So that's a skill that's required to be successful, and that's always been explained on every morning bell, every closing bell, and if you cannot participate live, we do have a recording. So I encourage you to invest time into looking at the live trading room recordings, and obviously live is the best way. I understand some of you, there is a conflict in schedule, but recording, you should have free time to watch the recording, right? You should try to avoid just, unless you're experienced trader, right? Some people are experienced trader, have a well-defined trading plan, they understand what this is all about. Obviously, then you don't need the recording, you just need signals. So that I understand. So if you traded it long enough where you have a well-defined trading plan and you understand what to do, then you don't have to watch the live trading room recording. But if you just started, or you're still not sure how to size your position, or most common mistakes, you always buy the same number of shares, or you always buy the same dollar amount, right? That I think is a mistake, unless it's always the same kind of beta, right? You can, I guess, trade always $5,000 as long as it's the same beta. But if you sometimes trade meme stocks, or sometimes you trade consumer staples, well, you can't just spend $5,000 on Procter & Gamble and $5,000 on Bitcoin, right? They will move in different speed, right? And your exposure to one class is different than your exposure to the other, right? You always want your exposure to be the same. Any questions so far? Slow down, Flash. Thank you, Kevin. Rolling on blocks, Biden, student debt bailout. Okay, thank you. Demo for Trader. Yes, so thank you for asking. Oh, the demo, for a demo account. I don't have a demo account for Trader. You would have to, I encourage you to open up account, right? So this is a link to open up, right? So this is you have to fund, initially when you create this will be kind of a demo account, right? A free account, but you won't be able to trade real money unless you make a deposit. So I'm gonna send it here. I did put the link inside of the chat box, inside of the questions. So Martin, please check it out. It's Yellow Tunnel LP Trader offer. This is a brokerage firm. We have a marketing relationship. I know these guys back from Options Express days. They're a great firm, again, FDIC insured, but their edge, I think, is the commissions, right? If you are trading options, most of the time you spend more than $10. I would say 9 out of 10 people spend more than $10 a month. If you look at your commissions, if you look at your statements or trade statements, you will see that, for each contract, you're probably spending, if I have to guess, 50 cents or $1, depends where you are. Right, so if it's $1 and you do 10 contracts or more than 10 contracts a month, then you're saving money. And some people in one trade, you do 10 contracts. So that becomes, you can save hundreds of dollars, you can save thousands of dollars. So it just depends on your activity. So please consider using this link. And just open up account. You don't have to fund it. Open up account, play around. We do have a demo, right? We had Kevin, Lex. We had Lex came out and give us a demo. He's an active trader. It's a very good software and has a lot of bells and whistles, especially if you're an active trader. So consider joining. TJ, long-term still down. Well, it depends what the long-term means. Personally, I still think we will have some kind of a recession. You already can see it in Europe, and I think at some point we will see it. I mean, unemployment has to rise. I'm assuming that unemployment is going to rise, and I assume that the Q2 earnings is going to be worse than Q1, and I will assume that the Q3 earnings is worse than Q2. And as long as that's the case, it's kind of irrational exuberance, right? The fact that our QQQ is up 37% in the first half of the year, and it's a record, right? It's record exuberance, right? Just like December was the worst month on record, or one of the worst months on records, December. Obviously January, February, or the first 6 are the best months on record. So at some point it ends, right? At some point it ends. Does it end on July 1st, or does it end on August 1st, or even September 1st? Well, that is a lot difficult to determine, right? Every time you try. But I'm still bearish. Usually from seasonality point of view, July, August, September, October are the worst months for the stock market. Right, one of the reasons we have the strong rally, because March, April, May considered to be the best months for stock market, right? March, April, May. And now we're going into July, August, September, October. These are the worst months from seasonality point of view. So combining with seasonality, combining with the record yield inversion, right? 2-year yield and 10-year yield is over 100 basis points. It happened only 3 times in the history of stock market in the past 100 years. It only happened, I think, 3 or 4 times, and every single time it happened, there was a recession, right? It doesn't have to be this time could be different. That's the argument. This time could be different. I don't think it's going to be different. So I think, we will. I think we will still revisit. We're probably not going to break September lows, October lows. But I think in the next 4 or 5 months, we will revisit them. All right. Martin, thank you. TJ, thank you. Thank you. But, it was great to, when we were in downtrend, it was much easier to determine that, right? But ever since, May, where we are above this trend, then it's kind of, there's 2 things you don't want to fight against. One is against the trend, and one is against the Fed. So if you're, if you're bearish on the market, you kind of fight in the trend. But I think Powell is pretty hawkish, and looks like we're not pausing. We're going to have at least 1 more interest rates hikes. Now there is, I think, 60% probability 2 rate interest hikes. And if this data continues on, it seems like Fed is going to. We're still far from target inflation. Fed is going to continue raising rates. So what we happen in March, where there's a distress in, regional banks, we will see this distress somewhere else, right? The high yield is, it doesn't look like, risk-taking environment. When high yield is so low and not that far away from actually October lows, that means that there will be liquidity issues. When? That's very hard to determine, but will we have them? Probably yes. All right, anything else? Renata, I'm up, right? So I agree. I've been bearish since September. I do agree with that. I've been wrong. I mean, in March I did say that the pullback is so I'll give myself a credit. I didn't think we're gonna, break through this level. When the market did break down in March on the regional distress, I did say we're going to have strong March and April, you see I had a lot of bullish positions as well. Market is continuing going higher. I think one of the main reasons, I was wrong in January, and it wasn't even reopening of China, which was the main catalyst in December, January. But the reason we broke the downtrend is because there is a new variable, right? And when you look at the model, when you look at the equations, right, and you're making an opinion, you look at different variables and you state your opinion. So I think the main reason most people are wrong this year is because ChatGPT, generative AI, and the idea that this is here, it's going to stay, and we're going to immediately realize benefit from the generative AI. And we'll see, right? I think long term we will, right? So long term going into 24, when the rates are going to start lowering, 25, yes, the bull market definitely will resume and continue going higher, but I don't think it's going to be straight line, right? I think at this point I'm still bearish, but point well taken. Any other questions? All right. So what else do we offer at Tradespoon? Stock forecast toolbox. It has been a very good model. It doesn't have opinion about Powell or Fed or interest rates or China reopening. It just looks at the volume. It just looks at the price action. So for the next 10 days, the model is negative, right? It turned bearish. It basically says that we're not going to break 438. We did. I think market is overbought. In the next week or two, I think we will have a pullback as we're approaching the earnings season. 6 months, similar setup. Model saw 407 to be support, 426 overhead resistance for the months of June. We are at 442. So the market did break through the predicted high, but these are just levels. And these are the cues that says we are right now roughly 5% above predicted high, which is market is extremely overbought, right? And in order for this catalyst to continue, you have to have some kind of additional catalyst in the market. It could be earnings, right? If the earnings are better than expected, then obviously the market will recalibrate itself. It will be more bullish on July, right? July it's at 426, 434. It will recalibrate. It will probably say, if I have to guess, 435 to 447 or even 460, right? Because model does see bullish trend. Model actually has been right. It's a lot. These levels have been reached a lot sooner, right? Model saw 445 in August, but we have 445 in June. So one way to interpret this, market is overbought and got here a lot sooner. And then the question is, does the trend continues? Does the trend continues? And, that basically is contingent upon earnings season. Any other questions? What do I make of Russian rebellion? It's the geopolitical risk obviously not factored into this price action, right? Market continues to go on higher despite uncertainty, and Russia just announced today that they're going to get out of this allowing Ukraine to sell wheat, right? Let's see, did the wheat actually reacted to this? No, it didn't, right? I mean, initially it did rally, but now it's back. So this is a perfect example where it doesn't matter what the geopolitical risks, people, the reaction is usually delayed. Or they think that this is just doesn't carry any risk. My opinion on the whole thing, that this is a beginning, right, of the end of Putin's regime. But again, timing it very difficult. When will this war end? When will Putin step away? Very hard to determine. It could happen in the next, 24 hours, or it can happen in the next 24 months. I think it will happen sooner than later, and you can see that his reputation is at stake. Everybody kind of realized that this is a lot of it is just imaginary kingdom, right, or imaginary power, and it can be easily toppled. But it requires somebody to go in there and change the government. Who's that going to be? We'll find out. But it's probably cool. I think in the next few months we will see more from Russia, and it could be good for the market, it could be bad for the market, right? Whoever comes after Putin, and if his government is actually unstable, and we know that it's unstable, right? Because this was kind of a warning signal. It's probably going to happen again. It just depends. If it's pro-West, then the market will rally, or especially if Russia-Ukraine war ends, then the market will continue to rally, right? That's another unknown. But if it's China, or if it's some kind of anarchy like this Prigozhin guy, which is you can think of it as an anarchist, not anarchist, but his credentials are questionable, then that could be bad for the market, right? Because it's stability, right? You don't know whether they will allow Ukraine to sell commodities like wheat or not. So TJ, that's my take on Russia, Ukraine. It's a risk. It's been a risk for the past 16 months. Market kind of got used to it and doesn't react, but the problem is real, and it can escalate or de-escalate, any given point, right? At any given point. And you can see in the prices of wheat, you can see huge moves in the wheat market, but elevator up, elevator down, so we'll see. Any other questions? I would do look at the yield, right? 10-year yield is trying to break out of this level. 2-year yield is actually at a 52-week high. We said that it's a regular correlation, right? Technology rallies, TLT sells off, right? People are either buying treasuries or they buying technology. You're not going to have technology up 2% and treasury up 1% for too long, right? This is just end of the quarter rebalancing. This has nothing to do with inflation. The correlation has been since March, the usual correlation. You either buy bonds or you buy equity. You're not going to buy both. So at some point, either the TLT going to continue going higher, right? Or you're going to have this 30-year yield continue to rally, right? Continue to reach 4%. Or you're going to have 30-year, 20-year yield continue to drop, and then technology is going to roll over, right? You're not going to have the same scenario as last year, where people were either selling everything indiscriminately or they were buying everything indiscriminately, right? Half of the people are buying treasuries because they think equity market is wrong, and half of the people are buying equity because they think bond market is wrong. And that relationship is not going to stay for too long. Thank you, TJ. So stock forecast toolbox, again, this is one of the tools that gives you an idea of support resistance, right? If you're a short-term trader, I would look at 10 days, and at 438, I would not chase the market, right? 442, we're at 52-week high again. I would wait for the breakout. What else? If you're looking for signals, we do have active trader, weekly trader, monthly trader, right? We give you stock ideas or options with specific entry and exit points. Right, so we'll give you, buy American airline, right? If it reaches 1760, this is your buy signal, right? Or if you see a pullback in the market, right? Let's say inflation came in worse than expected, then you would buy at 1648, right? You look at the pre-market futures on the data, or buy General Electric, right? You buy it at 107.74 or 105. So we are giving you different entry points, right? Entry 1, entry 2. I do believe in dollar cost average. I would not risk more than 2.5% of your account per portfolio. We put these guidelines, not risk more than 2.5% per account value, and consider only 4 active positions at a time. So that's active trader. Weekly trader is very similar, right? Every week on Sundays, we publish a list of stocks that we think are gonna outperform the market, right? Like NTAP, for example. So again, you have suggested entry prices for Monday based on the pre-market data. And same thing, doesn't matter if you're holding for a couple of days or you're holding for a couple of weeks, do not risk more than 2.5% for positions, right? And this is based on AI, right? We do have neural networks. It's not a generative AI where we're reading text scripts of, Wall Street Journal or, stock tweets, but we are reading, learning, analyzing, and making predictions based on data using similar networks and neural networks as generative AI. All right. So that's active trader, weekly trader, monthly trader. Elite Circle gives you access to everything. If you are just looking for stock trades, that's Robo Investor. If you're looking just for spread trade, that's Premium or Spread Trader. If you just want to follow my trades without having picks or tools, then it's a Shadow Trader. So those are different levels of subscription. I do encourage you to consider Elite Circle. It gives you everything, but more importantly, it gives you access to live trading room, morning bell and closing bell, right? I think it's important to follow the trades and participate in live trading room so you can learn how to build correctly position size. Can Apple keep going up? Can Apple, I mean, it can. Again, it's a historical moves, right? At some point, elevator up, right, in one line, right, since March, it's just a straight line. It's overdone. At what point will elevator go down? That's hard to determine, right? I think it was end of May, but here we are, end of June, and we're still no elevator down. So, I mean, we are approaching earnings season. It's not going to continue for too long unless Apple delivers a very strong earnings. So it could be that next 3 weeks, Apple continues going higher. They said that, I think, that this will be again negative earnings growth for Apple, right? I can't imagine elevator up if this is what they actually deliver on earnings call, right? They come out and say, listen, second quarter in a row, negative earnings growth. Next quarter is also going to be negative earnings growth. Retail has been very weak, right? The retail sector, people are not spending money on, retail. So retail has been weak. We've seen this in Nike. I mean, I guess people might be buying iPhones, but they don't want to buy Nike shoes. That's possible, but highly unlikely, right? This is just a very crowded trade where fear of missing out, and you have army of retail investors buying out of the money calls. At some point, this will end. All right. What happened to the bulls and bears? Don, we have issues with the quotes, so we took it out for now. We are working on restoring that. Sorry about that. Yeah, Don. So I know we still have some quotes issues. We resolve, at least US exchanges, we resolve them. We're still working on other exchanges, and bulls and bears is one of the issues. So we're working on that. Apologize. TJ, thank you. Don, thank you. What else? What else? Okay. I think that's all I wanted to cover today. Any questions? I do want to make sure. I mean, meanwhile, we are close to session high, right? Or we are at session high. Yeah, we're at session high. I mean, first I would, before you get, if you're in a bullish camp, I would want to wait for the breakout above this level, at least day 1, day 2, day 3. If by end of this next week, we are above 444, then at least that's your support, right? But if there is no breakout, then most likely next week, we're gonna retest this level again. So that's how I would look at the bullish versus bearish argument, right? You can be in bull camp, you can be in bear camp. That's totally fine, right? I'm not gonna, force my opinion on anyone. I'm giving you my opinion, but obviously, I've been incorrect in the past couple of months. But even if you're a bull, I would say, okay, let's just wait till you have a breakout above this level, right? I always say, wait for 2 to 3 days to confirm the trend change, right? If you think we're gonna break out, give it at least 2 to 3 days. And these are some of the other key points in my trading plan that I, propose for you guys to follow. All right, any questions so far? Brian, oh, thank you, very good. So you enjoying the source? Okay, Brian, do me a favor. When people say that, and we do have, if you go to, I don't know if you're on Yellow Tunnel or Tradespoon, you can do it on both, but we do have on, what's it called? Trustpilot. So if you go to Trustpilot, Yellow Tunnel, right? If you can leave the review, right? I'm gonna put both, I'm not sure, I mean, we have both subscribers. So I'm gonna send to all, or you can do it Trustpilot trades. What happened? Tradespoon. Okay, perfect. So do me a favor, since and this is for everybody, right? If you haven't leave us a review and you find this service useful, please write a review on the Trustpilot. Obviously, if you think that I was wrong since January, please don't write that on Trustpilot. On Trustpilot, just send me an email, open up a support ticket. I'll be more than happy to explain why I'm wrong, and I'll be the first one to admit it. But please consider leaving a review. Renata, short-term support and resistance on spiders. Well, without having a lot of technical analysis, this is your resistance number 1. Right, resistance number 2, if we break through this level right away, we're gonna retest 450, 455, right? That would be immediate extension, especially going into the earnings, right? People are going to be optimistic, they have fear of missing out, shorts are getting squeezed, we could get to 450, 455, right? That's resistance number 2. Support number 1, I mean, usually the gap, right? You have to close the gap, so I assume 438 is going to hold at least for day or two, right? So that's your short-term trade, is the gap, and then if we do break below that level, it's this level, 434, 432, somewhere, that's your support number 2. So for the bears to reverse the trend, they have to close the gap that would be initially bearish, and if it continues to trade below the gap, then it opens up the question to this level, right? This is August high, right? This is August, the breakout, August high. So this is almost 52-week high. This is the line in the sand between bulls and bears, right? I've said this in the past couple of weeks. As long as we're trading above August high, you don't know where the top of the market is, right? It could be 442, could be 438, it could be 450, I don't know. But if we do close below August high for a couple of days, that opens the door to basically, 410, 430 for the next, couple of weeks, couple of months. So these are the key levels. Personally, I am trimming a lot of my bullish position, right? I close small caps spread. I close closing Costco, half of the Costco. I close Transocean, close NOC. I would, we're done with the first half. I would start looking at the second half, figuring out how many bullish and bearish positions do you want. Personally, I have three bearish, 1 bullish position. If you're in the bull camp, you can have 3 bullish, 1 bearish positions. If you're in the camp where you don't know, or market neutral, okay, then you have 2 bullish, to bearish positions, right? If you're not comfortable trading options, to hedge with options, again, you know the TLT, silver, SH, these stocks or these ETFs will go higher if the market pulls back, right? So you can build two bullish, two bearish positions, right? I think having all your positions bullish or all your positions bearish, I think that's a mistake. All right, that's all I have for today. Thank you very much. You guys have been awesome. I will see you at the closing bell or Tuesday morning, right? Wait, Monday morning. Sorry, Tuesday's day off, Monday. Happy 4th of July if I don't talk to you. Please enjoy your time with friends and family. And I will see you Monday morning or Wednesday, closing bell. Thank you very much and have a great day. Thank you, Brian, for your kind words. TJ, thank you. Brian, thank you. Appreciate it. All right. Thank you very much. Please consider leaving on a Trustpilot, and please consider joining Tradier. That would be great. Thank you very much and have a great day.